They expect the price of gold to come down. There's a lot of price hikes coming in the future. We're going to get a big surprise. A lot of people are going to be surprised.
What happens when investors finally wake up? Gold $3,000, $5,000, even bigger? The masses are selling gold, but the smart money, they're loading up. While Wall Street chases overvalued stocks like Walmart at 40 times earnings, gold mining stocks are sitting dirt cheap, and Peter Schiff says that's about to change. Gold is crushing the S&P, central banks are hoarding it, and silver, it's primed to explode. So stick around. Peter's breaking it all down right now.
Well, they didn't care about 2,000, so I don't know why 3,000 would be much different. So I don't know if it's a number that's going to be the catalyst for investors to wake up, not only to the opportunities in gold in the bull market. Gold is now up tenfold since the low in 1999, 2000, 2001. It's outperforming the S&P. They were talking about the S&P hit a new all-time record high the other day, but compared to where it was January 1st of 2021, the S&P was down about 57% if you price it in gold. So, for all the hype in the stock market, it hasn't even beaten, a bar gold, right? And so it shows you that really what we're looking at is inflation, not legitimate increase in value. But I think at some point, investors are going to look at the bull market they've been missing. In fact, all last year, investors were selling their gold, and that's carried into this year. Americans have been net sellers of gold. They've been liquidating gold ETFs. They've been selling their physical gold. I know that just from my own gold company, where we've been getting a lot of people calling us up to sell their gold. There's been net outflows out of all the gold stock ETFs over the last year and so far this year. So Americans have been completely missing from this bull market. It's mainly been led by emerging market central banks, who have been the big buyers. And they're not anywhere near done buying. They're really just getting started. They have a lot of gold to buy. So when the public starts competing with the central banks, then I think you're going to see an acceleration of the uptrend. And I think then it'll spill over into silver, because the central banks haven't been buying silver because they don't really have a place to store it, so they buy gold. But the public will buy silver. So I think silver has even more short-term potential than gold. And I think money's going to come into the mining stocks. I think Wall Street is going to take a look at stocks that are trading. The big stocks are trading at very low multiples, low double digits, 11, 12 times earnings. And that's, trailing earnings. Their actual earnings for 2025 will probably be so much higher than what analysts estimate, that most of these big stocks are probably sporting PEs of like 7 or 8. Compare that to, look, Walmart, which is down 6% today, is trading at 40 times earnings. Why pay 40 times earnings for Walmart? How fast could they grow their earnings? They don't have anywhere near the earnings growth that you're going to see in these gold mining stocks that are trading for, a fraction of the valuation of a Walmart. Well, I think it's mainly a function of the expectations of future earnings. I think the analysts that cover these stocks and stock market investors in general, they have no idea why gold is going up, and they assume that it's just a fluke and that gold prices are going to come back down. And so they're not willing to put a lot of value on gold companies' earnings because they don't think the earnings are sustainable. Meanwhile, they look at the increasing cost of mining and they assume that that's going to continue. So they think it's going to continue to get more and more expensive to mine gold, but they expect the price of gold to come down. So it really is going to take a change of that perspective. Now, of course, at some point, gold prices will go up so much that it doesn't even matter if they come down. In fact, I think we're already at that point. I think even if gold went back to $2,000 an ounce, I think these mining stocks are still a good deal. But gold's not going back down to 2,000. It's more likely to go to 4,000 than 2,000. And so analysts have to start, pricing this stuff in and realizing that there's tremendous potential. Now, if they don't realize it, the companies themselves will. is gold companies are increasing their share buybacks. And so if Wall Street won't buy the stocks, the companies will buy the stocks. And they have massive earnings to do it with. And a lot of these stocks have got great balance sheets now. They don't have a lot of debt. They got a lot of cash. They're earning tremendous amounts of cash. There are companies that are able to mine golds for under $1,000 an ounce. Most of them, the cost is maybe $1,200 to $1,400 an ounce. But when you're talking about $3,000 gold, there's a lot of margin in there. Again, it's because the public has been missing, and the public is usually the buyers of silver, not the central banks. They say it's the poor man's gold. When gold got up near 2,000 in 2011, when the public was involved, when the Fed was doing QE and everybody was worried, and gold prices got up to 1,900, silver got up to 50. Now gold is 50% higher than it was at that peak, and silver is 40% lower, right? So silver's got a ways to go, but once it really starts to break, I don't know where the key level is. Is it 35? Is it 40? Where it is. But I think when it goes through 50 next time, it's going to go through it, like that proverbial hot knife through butter. And then I think 50 is going to become the support level for silver. I don't know how long it's going to kind of base build at around 50, low 50s. But then I think it could quickly double to 100, especially if gold keeps rising. So if gold goes to 3,200, 3,300, I think in that environment, silver could go to 100, and it would still not be expensive relative to gold. It'd still be pretty cheap. I think they're already maybe positioning themselves to blame it on the tariffs, which, is a gift that Trump has given the Fed, and, an excuse. But we've had 4 consecutive months of accelerating CPI. It went from 2 to 3, from 0.2 to 0.3, 0.3 to 0.4, 0.4 to 0.5. And so now you're talking about 6% annualized inflation, 6.2 if you take the last month. If you take the last 3 months, it's 5% inflation, 4.9. So we're certainly heading in the other direction from 2. And if you look at the 25% plus surge in commodity prices that has taken place over the past year, and figure that a lot of those price increases haven't even made their way into the CPI yet. There's a lot of price hikes coming in the future, because the numbers benefited because we had a big drop in commodity prices that helped bring down the CPI in 2024. But now we have a big surge in commodity prices in 2024 that's going to be pushing up the CPI in 2025. So we're going to get a big surprise. A lot of people are going to be surprised, and the Fed is completely asleep at the switch, or deliberately ignoring what's happening. They claim that they have restrictive monetary policy. They don't. Policy is still stimulative. They never actually got into restrictive territory. They aborted the hiking the minute banks started to fail. But they hadn't put that inflation genie back in the bottle. It was going to take a lot more work to do that. Remember, in 1980, interest rates got to 20%. And, inflation, CPI, never got any higher than 13%. Of course, it was a much more honest CPI back then. But even if you say, okay, based on our dishonest CPI, yields were 9%, how did we stop that inflation with a 5% Fed funds rate? We didn't get anywhere close to 9, let alone above it. So the Fed aborted too soon, declared victory, too early. We did get a temporary reduction in the rate of inflation, right? It went from 9% to 3%. But now it's headed back up again. And if the Fed keeps rates where they are, at some point, not too far away, we'll be back at 9% again or higher. The Fed needs much higher interest rates. The problem is we're too broke to afford it. In 1980, we could afford 20%. we couldn't even afford 5%, right? That the banks started to fall apart. So the Fed had to back off.
Gold is outperforming the stock market. Central banks are still buying, and silver could be next. The big question is, Are you ahead of the curve or will you be left behind? If you found this video valuable, smash that like button, subscribe for more insights, and hit the bell icon so you don't miss what's coming next. Because in this market, timing is everything. See you in the next one.